Hello and welcome to this episode of the Raising Capital podcast and YouTube show. I'm your host, James Tuckerman. If you have not done so yet, please make sure that you hit that subscribe button so that you never miss an episode. And if you're listening to this or watching this on your phone, and if you have never given us a review, please take a minute to do just that. You'll be helping us in ways that you may never know. Now, this episode is proudly brought to you by the B2B-Podcast Network. If you are a B2B business owner, B2B-io helps you automate over 90% of the client journey via one suite online platform. It's a funnel builder, a sales pipeline manager, and a CRM all in one. Use it to get more B2B clients and keep them forever. Now, today I have as my guest Kate Gubbins. She's the CEO and founder of Simpology, which is a digital mortgage platform solution. And I'll get Kate to share all the details about that in just a moment. It was initially self-funded. Then Kate raised about $5 million through angels, and then had a couple subsequent rounds, and recently raised $15 million from the REA group. Hello, Kate. How are you?
James, good. Thanks. Thanks for having me.
Where are you today? I always like to know where I'm having a chat with someone from.
So I'm in the office, hooray. I must say a lot of my gang aren't here. They're still working from home, but I'm in Redfern in Sydney.
In Redfern in Sydney, cool, rock and roll. Well, I'm in Melbourne, Victoria, and it is wonderful these days that it is just so simple and easy for us to catch up and have conversations wherever we are in the world or Australia, and it feels kind of cool. Now, this business, Simpology, when you went out to investors for the first time, how did you pitch it? And is the narrative different or the same than you pitched today? How would you describe this business of yours?
Yeah, without a doubt. So the first time, so the reason why I first went out to get funding is, as you said, the initial phase of my business where we were building our platform was self-funded. So, and our customers, the platform that we built is our customer base of banks. And so we needed to have bank grade, enterprise grade technology for a bank to, no matter how good our technology was, there was no way they were going to onboard us unless we were of a certain size. So it couldn't be Kate sitting in front of it in her garage selling them wonderful tech. It had to be Kate with a great, team behind her.
Had to be robust and defensible and uncrackable.
Yeah. Yeah, absolutely. Yeah.
I know this because even just when we wanted to get, what's the thing that you have to get in Europe where you're compliant about the privacy things?
I did G something or other.
GDPR compliant. Suddenly it was, whoa, really? I'm sure that what you had to go through is absolutely next level.
Yeah,
so
absolutely.
That was the cause, huh? You had to say, I'm going to have to raise money to make this secure.
Yeah. Without a doubt. And also the onboarding process with any bank takes an inordinate amount of time. So we really had to fund the time that we had to take to be onboarded by a bank and win a bank as well. So that's why it got to a point in the evolution of Simpology that I needed to raise some capital and build the team. And so I was actually lucky in the sense that I started putting the feelers out in my own network, and network including family as well, to be honest. And I was very lucky. My brother actually ended up sitting on a chairlift with the head of one of the major funds in Sydney for a period of time. Their sons were on the same ski team. And they were the dads looking after the ski team. And so for a couple of days, they were going up and down chairlifts. And so my brother they were talking about everything under the sun. And my brother started telling this guy about my business and the fact that I was at this point in time and I needed to raise money to go to the next level, et cetera, et cetera. And this fundie was good enough to say, well, how about Kate gives me a buzz and tells me about her business, which I did. And that led to an introduction to one of the sort of largest family groups in Sydney, and then the rest of the story.
And then it began. Well, let's pause there for a moment because there's one thing that's really important about that, and that is you obviously had narrowed down You'd found a way to describe what it was that you were doing where your brother could say to a stranger on a chairlift what it was that you were doing. So what was the elevator pitch back then? What is the simple Simpology pitch? The clients are banks. What do you do?
Yep. So what we do is we have a technology platform that allows a bank to build a digital schema that represents all of their internal credit policy, business validation, all of their secret sauce, if you like, with regards to a mortgage application. Right. And mortgages, everyone loves selling a mortgage in Australia. And also banks, they do have a lot of secret sauce insofar as, what their policies are and what their logic is. So we built a platform whereby that schema can be digitized and published in a secure fashion down to external user interfaces, such as broker systems, that can help a broker put a loan application together that's valid with the lender's business logic and requirements, submit it into the lender and get a faster outcome because they have complied with the lender's policy, essentially.
Where did this wild idea come from, Kate? Because it's not like the typical startup idea. It's a complex idea. What was this business that you were running that you decided to sell and move into creating Simpology? What's the backstory there?
It's a big piece of the story, full stop, actually. And particularly even from an investment perspective. My original business was a mortgage management business. And if you like, it was a small version of what a bank's whole ecosystem is when it comes to selling a mortgage. And so on a grassroots level, I understood the difficulty that banks had in communicating effectively their logic and their requirements down to their sales force, external sales force, which is brokers that they don't necessarily control, and ensuring that those parties in the outside world were doing a good job in conveying to the customer, what the product is and what the requirements are, et cetera, gathering all the right details at point of sale and submitting it in ready for assessment. I understood all of that because we were actually at a grassroots level experiencing the difficulties of conveying that down to our own network, which was mortgage brokers. And then the quality of the deals coming in, the more rework you've got on a deal when you're trying to assess and approve a loan costs you more. So every time you touch a loan, it costs you $200, let's say. And so the better quality deals cost you less to process, therefore better margin on the deal, essentially.
So I can see this. I can see you working in this job. You're at the mortgage broker level. You can see how the banks are struggling with these different things on mortgage management level. You had that business. You sold it to fund the next thing. And as far as I understand, you then spent about 2 or 3 years getting your ducks in a row before you raised money. Yeah. During those 3 years, did you have any clients?
Kind of. So again, because I was in the market, I had a really, really great network within the market. In those 2 to 3 years, we actually built the first iteration of our platform, which is the capability to have that digital schema, if you like, that's publishable down to an interface down at the broker fingertips to help them lodge into lenders. So we had our first version of our platform, and I actually had started, by the time I started earnestly looking for an investor, we had a few customers that were onboarding already. And we actually, I think this was a key one as well. I actually had a lot of, I'd been working and nurturing on a lot of the key stakeholders at the banks over that period and telling them what we were up to and, what was coming, we're going to solve all your problems, all that sort of stuff. And they actually had a lot of them had really believed in what we were doing and the use case, the problem we were solving and the way we were solving it. They really believed in it and they saw the value in it. And so while we didn't have sales with all of these stakeholders, I had a whole lot of stakeholders that were willing to talk to investors, to tell investors from their point of view. Yeah. And they did. They actually had meetings with investors to tell the investors from their point of view why this was going to be a winner in the industry. Yeah. So that was a key one, actually, to have.
So that's cool. So there's clearly a clear case study. There's a good backstory, guys and gals. If you're listening to this, this is a common theme. There seems to be a narrative or a backstory which helps the entrepreneur explain the situation. Yeah. A simple story that even Kate's brother can explain to a stranger on a chairlift. Then Kate's working behind the scenes. She's pulling together the technology. She does not have clients yet, or they're smaller, maybe, special deals for new people, those sorts of things. And then we jump ahead to this scenario where you need to raise some money because the big banks are not going to take you seriously unless the platform's seriously robust. What was this the first, your brother, was that the first conversation and then that opened doors to other conversations? How did it flow from there?
Yes. So I did have a few other opportunities on the go, to be honest, when this particular opportunity came up. And I actually had, from my brother's conversation, I had a conversation with a key person who listened to my story, told me that it was a good story, but decided not to invest, to be honest. But I did say to him, well, okay, so who can you introduce me to? And he introduced me to another couple of key parties, and one of those parties ended up investing. So there was certainly a few steps in the story.
And a few opportunities to practice too, where people can tell you why they don't like it.
Yeah, without a doubt. Yeah, without a doubt.
Go and improve it. So this amount that you raised was about $5 million. Now, this was obviously private deals, so the valuation is usually private. But how many people did you have among that 5 million? Was it one person that dropped 5 million or 10 people that put in $500,000? What was the breakdown?
Well, in the end, the party that was the key investor had not before invested in a fintech startup. They'd invested in a whole.
They were the lead. They'd invested in other things, but not a fintech startup.
Yeah, they'd invested, like, honestly, their portfolio is ginormous, but they had never invested in a fintech startup. And so they actually reached out to their own network and asked a few other parties to come and do due diligence on us. And those other parties had, one, for instance, had built, gone from fintech to $1 billion valuation. Another had, so they pulled in some people who knew what they were doing, essentially. And they did the due diligence on behalf of this other party. And in the end, they invested too, which was pretty cool. So in the end, I got more than just the investment. I got these wonderful people who knew a lot about how to turn my business into a success, which was really
set
cool.
You up for the next round. And set you up for the next round. How much did the lead put in?
Of the 5, perhaps, I think it was 4. In the end, it was 4.
Wow, this is a big dollar figure. That's cool.
Yeah.
So when you say due diligence, how thorough was the due diligence, or how intense was the due diligence?
Quite intense. So obviously, on that would be one thing I would put forward is, if you're going out there to look for investors, have all of your collateral ready to go so that you can, you can throw it at them when they ask you for it, and you can answer any question that they ask. And so, definitely have your data room and your pitch deck, well, obviously your pitch deck, but your data room ready, know all your key metrics when they ask you all of those questions, et cetera, et cetera. So the due diligence was quite stringent in that, again, at this stage, we had the first iteration of our platform. So they did some due diligence on the platform itself. They also did some due diligence on the opportunity. And again, it was really key and really great to have some stakeholders from the industry come.
It's almost like having a purchase order that you can go to the bank with and say, can you lend me some money because I've got this big purchase order? You're going, do you want to invest in my business because I've got these 5 people that are just chomping? chomping or champing at the bit, whatever the expression is, to get on board.
Yeah, without a doubt. Yeah, that was a huge, I'd say a huge piece of the puzzle was having not me tell them what the opportunity was, but the parties that are going to benefit from the technology tell them. Yeah. Yeah.
No, I'm just that's just it's blowing my mind that that the way that it came in was that hang on, I've lost my train of thought there. I'll click my fingers 3 times. By the way, this is the first time I've ever done that. Yesterday I was up at 5 and I was doing a Zoom at 5 a.m. and this morning I was doing a Zoom at 6 a.m. with American investors, and the brain is not as sharp as it should be.
Yeah.
All right. So where am I going here? All right. So what I'm hearing is when you invested your own money, that was kind of like the seed capital stage.
Yeah.
When you invested the 5 million, was it spoken about as Series A, or was it talked about as seed, or the language just wasn't used, or how did people talk about it?
Wasn't really used, but it would have been Series A rather than seed, without a doubt. Yeah. We had a product, we were ready to go, basically. So we were at that stage in the genesis of Simpology. So yeah, it was certainly more Series A.
Yeah. And how long ago was that now, that the $5 million plonked in the bank account?
It was actually 4 years ago. 4 years ago.
4 years ago? Did you treat yourself to a cheeky Chardonnay? Or?
Yeah, absolutely.
It would have been a very exciting moment. Now, more recently, you've had another, shall we call it a champagne moment or a Chardonnay moment, when the REA group decided to invest. And for those who aren't familiar with the name, which is probably not very many people, it's a massive behemoth of an organization that owns pretty much every half of the real estate industry online, really, doesn't it? They got the apps and the websites and the whole bit and all the other stuff. How did that all come about?
Okay, so probably even 2 odd years ago, I had an opportunity to get to know a few of the key stakeholders in the financial services arm of REA, because, to be honest, I was pitching some of our wares to them, and nothing happened. So it didn't go anywhere, which was a pity. But anyway, made some great contacts, and over time we've kept in touch, which has been really good. And then definitely the world has changed a lot insofar as origination of mortgages. And as you know, well, even with COVID, we're all digitizing everything right now. And certainly the origination workflows are all digitizing really, really quickly. And the audiences at point of sale, which might be broker or consumer, are all really, really sort of open to using digital workflows to do anything, as we all know. Everyone's sort of embracing digitization. And so we, Simpology, so over that period from the first investment, we've moved ahead, and we've got a bunch of the major banks and second tiers and even and smaller banks on board, which is really great. We've got about 30 lenders who are using us now. And in the last perhaps 18 months, we decided to actually re-platform ourselves. And so we've essentially rebuilt everything with a really, really keen eye on digitization and our ambitions and what we want to achieve with regards to mortgage origination are really in line with what REA Group want to achieve as well. And so the opportunity came about to perhaps, it was probably 9 months ago. Again, I had the opportunity to get in front of REA stakeholders and talk about what we were up to and what we wanted to achieve. And it became very apparent that we were very aligned from the point of view of what our strategic objectives were and what we wanted to achieve. And so the conversation turned into an investment conversation, which was great, actually.
Yeah, let's tear this piece down. I did recently have someone on the show, and something similar happened with a giant insurance company. And it's not something that it seems that most people who are building a business or raising money actively go out to do, because they have to find a senior middle manager within a larger organization that's willing to champion you to the broader organization itself.
Yeah.
So who were the people that you were speaking with? When you say stakeholders, were they the general manager of a division, or do they have their own dedicated investment unit within the organization? What's the structure here so that other people might be able to navigate similar structures in other organizations?
Yeah, so this was not, so REA definitely have an investment arm that completely managed the whole investment, but it wasn't that piece of the organization. It was the business part of the organization that made the sense for us to be working with. It was financial services, essentially. And so so we were having a business conversation that then turned into an investment conversation, rather than me knocking on the investment group's door, to be honest.
So you were talking to them about the business. It was a senior decision maker within the finances arm. So it could have been a product head or someone like that.
Yeah.
And then they just went, hey, listen, Kate, we got this division of the business, which is the investment division, and they investment in businesses like yours. Go talk to them.
Yeah, pretty much. Yeah.
So from that first conversation, and I can't imagine what it was. Was it over a Zoom call, or did you meet someone in a boardroom or a coffee shop? Can you remember?
No, I guess it was during COVID, but it was in a coffee shop. Yeah.
It was in a coffee shop, one of those brief periods where they let us out.
Yeah. I do remember, I did know them. We'd had a nice relationship for a couple of years beforehand. So it wasn't that unusual.
You live in a lovely suburb, Redfern. You'd head down to Surrey Hills and have a coffee by a Melbourne barista.
Yeah, exactly.
Anywho, so you had that conversation, and it takes a little bit of time. Now, so the first time when you did your Series A, you had these people come in and do some due diligence.
Yeah.
What was it like the second time round when it was REA?
Oh, it was more intense, to be honest. It was absolutely more intense, and maybe because we were more of a company at that stage, or there was so much more that they had to review from a risk perspective. All of our current contracts with our customers, and certainly now that we were really servicing banks properly, were we servicing them all compliantly, and all that sort of stuff. There's a whole lot of legislation that we have to adhere to. So there was a lot more that they had to dig into to ensure that we were a safe bet, to be honest. And then, of course, I've got a big team around me now, so they absolutely had a look at my team and whether they were worth investing in as well. Because, of course, they're not just investing in the tech; they're investing in all of us as well. So yeah, it was a lot more intense. All of my team got involved, everything. Yeah.
So if at this point you've got 25, 30 banks, you've probably dusted off your pitch deck from like the early days and added everything that's new to it. How big was this market that you're introducing to them? Because they must see this as a significant opportunity if they're going to drop $15 million and they're already a behemoth. And they're obviously thinking about your business as a, I don't know, 100 million, 500 million, $1 billion company. Is that the view that they're taking?
I hope so.
You hope so? How big is this market? How big is it? Because I'm obviously, I'm just a layman interviewing you. I didn't know that there were that many lenders even.
Yeah, no, genuinely, there's so many more. There's a lot of lenders in the industry.
This is just Australia as well too. And you'd have plans for the rest of the world.
Right. And there's a lot of lenders that people in their everyday world don't realize are lenders as well. So there's a lot. There's easily 100, if not more, 150.
Just in Australia.
Yeah, absolutely. Without a doubt. Yeah. And we actually are over in New Zealand as well. So there's the New Zealand market that, is part of our immediate remit, essentially.
Yeah.
Yeah. Yeah.
And they've got a
So
big presence in there as well too. So there's also the strategic value of having that organization to back you. Now they're publicly listed, which means that when they invest in you, they need to declare and disclose their investment, which means that suddenly you would have had to have revealed how much your business is worth based on that valuation on paper. Are you prepared to share that right now?
Oh, sure. I mean, anyone can look it up, but yeah, so they invested.
How much is it?
They invested 15 mil, and it was a 45 mil investment. Valuation.
Yeah. Evaluation. So you didn't have to give up too much, and you're already at a $45 million valuation. Well, that definitely would have been worth not just a glass of champagne, maybe a bottle of bubbly to go with that, a top shelf bottle of bubbly.
Yeah.
I've got only one or two more questions for you, and hopefully they're reasonably simple. But what was the hardest bit? So often we think things are going to be easy, and then we go out and we discover that they're a little bit harder. What was the hardest bit?
I definitely, everything always takes longer than you think it will. I mean, I'm sure that's what everyone says to you, but without a doubt, everything takes longer than you think it will. So you've got to it's wise to really believe that when you set out, because that can knock you about a bit as you go through the journey. And of course, there's so many ups and downs as well. You'll have a win with a customer, and then you have a loss with an investor, or vice versa, whichever way it goes. And even you're constantly building, full stop, whether it's the technology or the people or the customer base or whatever it happens to be. It's, there's no letting up. You can't not work on it, full stop. So you've got to be prepared for that as well, to be honest.
And some people will say, oh, she was so lucky because her brother was on a chairlift with someone else. And the reality is that your brother knew everything that you were doing, and you'd given him the story. He knew exactly what he needed to pitch because it had been bedded down. Then when these initial investors, you began speaking with them and they brought in their investors, you had to have it bedded down. Plus you'd already done your groundwork by getting all those different lending institutions interested in what it was, so that your story was even more compelling. And then when REA comes around, people say, oh, what a wonderful coincidence for you, Kate, that you happened to be in the right place at the right time. No, you'd set yourself up for that situation. Okay, what was the easiest bit? Were there any easy bits? Were there bits that you went, oh, that happened a little bit easier than I expected?
That is a hard one.
Isn't it interesting? We have to pause.
Yeah, that's a hard one. I mean, oh God, that's a really hard one. I mean, this will sound really flippant, but an easy thing is constantly believing in your own story and keeping the passion going. That's actually, funnily enough, even though it's all such hard work, that's a really easy thing. And the rewards that you get, of course, not just, investment rewards and all that sort of stuff, but the rewards that you get from bringing something to reality and having, building a team that believe in it as much as you, and all of your customers giving you feedback that makes it all worthwhile. That's really the cool and easy bit, because it's really, really rewarding from that sense.
And if you're just listening to the audio, Kate's eyes were almost the size of saucepans just then. I could see the passion in her eyes. And a lot of people don't get this. If you're not into what it is that you're doing as an entrepreneur, you're not going to last 6 months.
No, I agree.
But if you're into it and you see the difference.
Yeah, I completely agree. And even just from the investment perspective, going back to that, I mean, they're investing in you as much as the opportunity as well. So, you really have to have that passion in you, I think.
So to wind up, where to next? Australia domination, New Zealand domination, world domination. Have you thought about the health insurance industry? I can see it's a logical progression. What next?
No, you're right. There's a lot. There's so much we can achieve. But this year, for us, we're bringing to market our re-platformed version of ourselves. So the whole new version of ourselves, which is really, really exciting. It's genuinely, I already thought my product was awesome. And now this new version of ourselves It's going to blow the socks off so many people. It's going to be great. So we're really looking forward to a really great year this year. And yeah, you know, we're lucky, we're well funded, and we've got good product. I've got great team. I've got good customers. So it's just a matter of doing a good job, really, from this point onwards. So it's going to be a good year.
Excellent. It sounds very, very exciting. Thank you, Kate Gubbins, for spending some time with me today.
Thanks, James. Good to have your time. Thanks.